Welcome. In this video, ZBCN coin bullish movement begins. We will analyze it. Don't forget to subscribe, like, and please watch to the end to understand.
A clearly noticeable and increasingly strengthening upward trend structure has been observed on the chart. This trend pattern represents a highly important technical structure, showing that the price is progressing upward in a rhythmic pattern and indicating that market participants are increasingly willing to buy at higher levels. Such trend lines are not just visual guides, they are also concrete indicators of how the supply-demand balance evolves over time. In particular, an ascending trend structure reveals that, despite periodic pullbacks, the price continues to form higher lows, showing that buyers remain strong and market confidence is intact. Each time the price reacts upward after touching this ascending trend line, it exemplifies the frequently observed and highly valuable technical behavior known as price bouncing off support. Every touch is seen as a buying opportunity, and these areas often attract strong buyer interest. Therefore, the ascending trend line acts not only as a support level, but also as a psychologically trusted reference point for market participants. This can lead to renewed upward momentum when the price approaches this line again due to increased buying pressure. Reactions near the trend line serve as important technical references for many actively trading investors. As a result, investors tend to pay closer attention to candlestick formations, volume movements, and signals from other indicators in these zones. Each healthy reaction from the trend line not only reaffirms the trend's validity, but also provides a strong signal that the upward potential remains intact. On the other hand, the price approaching this trend line at intervals and making upward moves each time it touches the line also provides important insights into market dynamics. This structure not only demonstrates technical strength, but also psychological confidence as buyers remain active and willing, and while sellers accept higher pullback levels. This typically indicates that upward potential is being preserved. Furthermore, the reactions along the trend line can shape not only current buying and selling decisions, but also forward-looking projections. A trend line plays a critical role in identifying potential correction levels, buying opportunities during pullbacks, and possible targets. Therefore, the reaction movements that occur when the price touches this line may be key in investors' decisions to open or hold positions. Additionally, continued upward movement after bouncing off the ascending trend line is a very clear sign of sustainability in technical analysis. This is viewed as a positive development by both short-term traders and those following medium to long-term strategies. Price movements along an ascending trend line often pave the way for testing new highs and targeting even higher levels. This indicates that the price maintains its upward targets and increases investor confidence. From another perspective, the price's respect for this ascending trend line signals the continuation of a stable upward trend in the market. The fact that the price does not fall below this line and continues to react upward suggests that bearish scenarios are weakening while buyers remain in control. This is considered a data point supporting overall market optimism. At the same time, unless a sustained breakdown below this line occurs, it's difficult to argue that there is any structural deterioration in the market. Taking into account all of these structural and psychological elements, the fact that each touch of the ascending trend line leads to a new upward movement is highly positive not only technically, but also in terms of investor confidence. This type of behavior confirms the trend's strength and continuity while offering investors an opportunity to shape their strategies around the trend line. In technical analysis, success often lies in working with reliable structures and accurately interpreting their validity. From this perspective, the reaction movements along the ascending trend line generate positive signals both technically and psychologically. Moreover, the more frequently this line is tested over time and followed by upward reactions, the stronger and more reliable the trend becomes. In technical analysis, a trend line is considered stronger the more often it is tested without being broken. Therefore, the price's respect for this trend line is a highly positive development not only for the current situation, but also in terms of future expectations. This makes it very meaningful for investors to monitor this trend structure and base their strategies accordingly. Lastly, whether the reaction movements along the trend line are supported by volume is also an important factor. If these upward moves occur with increasing volume, it can signal strength not only technically, but also fundamentally. Rising volume indicates greater market participation and suggests that the move is driven not just by technicals, but also by demand-based momentum. This provides a strong signal that the trend may continue for a longer period. In conclusion, the clearly defined ascending trend line on the chart shows that the price continues to hold upward potential and that trading strategies based on this structure remain valid. The fact that the price bounces upward each time it touches this line is one of the clearest and most reliable signals offered by technical analysis. As long as this structure is maintained, it's reasonable to say that market optimism persists and that the likelihood of the price reaching upward targets remains high. Therefore, focusing on the ascending trend line and closely monitoring price movements within this structure will be a very wise strategic approach for investors. But we can't make decisions based on trends alone. Let's take a look at the other metrics too. Stay tuned.
The breakout of this resistance level by the price followed by a pullback toward the same level can be considered a highly positive signal from a technical analysis perspective. This is because the breach of an area where sellers previously stepped in strongly may indicate a shift in market structure and suggest that buyers are gaining strength. Resistance levels are viewed as psychological thresholds among investors and are often points where the price reverses. Therefore, breaking through these levels can signal a shift in overall market sentiment and the potential continuation of an upward trend. When the price breaks this level and then returns to test it, this is known in technical analysis as a retest, and it's a commonly observed pattern. This structure shows that the price has established a new support level and that this level is gaining strength. Especially after a breakout accompanied by significant volume, a retest is a strong confirmation mechanism indicating the upward move may continue. In other words, if the price reacts positively at this level, it suggests that this point has now become a support and that the likelihood of targeting higher price levels has increased. Such retest moves can also be very important for investors looking to solidify their positions. When the price returns to the broken resistance level, it offers another buying opportunity for those who previously missed the move. This can lead to an increase in trading volume, which in turn may contribute to a stronger upward move. Since these kinds of levels also attract the attention of large investors or institutional traders, the likelihood of increased buying pressure is quite high. In addition, if the price holds at this level and reacts upward during the retest, it instills confidence among market participants. This confidence can positively affect market sentiment and bring more buyers into the market. As a result, the price may break the previous peak and increase its potential to reach new highs. However, one important factor to watch during such breakouts is trading volume. Breakouts that are not supported by volume can sometimes fail and be considered a false breakout. But if the volume increases and supports the move, this becomes a stronger technical signal that the upward trend is likely to continue. The fact that the price has previously been rejected multiple times at this resistance level makes it an even more significant zone. Since earlier attempts failed, many investors may have viewed this level as a sell zone. However, now that it has been broken and the price is attempting to hold rather than fall when testing this area, it shows a shift in investor psychology. More investors may now start to see this level as a buying zone instead of a selling one. Breaking through the resistance level and then testing it also supports a breakout retest continuation scenario from a technical structure perspective. According to this scenario, a test move that follows a breakout often marks the beginning of a new upward wave. For the move to signal a healthy rally, the price is expected to consolidate briefly at this level before resuming its upward trend. Therefore, price behavior around this level should be closely monitored by investors. The stronger the buying pressure at this point, the stronger the potential continuation of the uptrend. In such a case, renewed upward momentum in the price could pave the way for a rapid move toward the next resistance level. This could technically initiate a chain reaction of upward movements. At the same time, previous highs may become new targets, and breaking those could bring record levels into focus. If this breakout retest structure continues, market confidence will increase, leading investors to expand their positions. This growing confidence will not only attract new investors, but also encourage existing investors to hold their positions. As a result, the uptrend could evolve into a more stable and long-term movement. In conclusion, the upward breakout of a resistance level followed by a retest can be considered a very healthy and strong technical formation. This pattern is a significant signal that could pave the way for the price to reach higher levels. Monitoring such technical structures closely allows investors to spot potential opportunities earlier and execute trades with better timing. Especially for long-term investors, such breakouts could indicate trend reversals and signal the beginning of major price movements. Therefore, the importance of this pattern in technical analysis is considerable, and accurately assessing this formation can play a critical role in developing successful trading strategies.
The MACD indicator is one of the most popular and reliable technical analysis tools used to assess the momentum of price movements. This indicator provides investors and traders with important insights into the current direction of the market. In particular, the upward movement of the lines generally indicates that the market is gaining strength and that buyers are becoming more active, which is considered a highly positive signal. Therefore, periods when the MACD lines gain upward momentum are often accompanied by upward price movement. A structural analysis of the MACD reveals how effectively it tracks trends. It has two main components, the MACD line and the signal line. The MACD line is the difference between two exponential moving averages, typically the 12 EMA and a 26 EMA. The signal line is a 9-period exponential moving average of the MACD line. The relationship and positioning of these two lines are very valuable for interpreting the market's direction, momentum, and potential reversal points.
If the MACD line is in an upward movement and positioned above the signal line, this indicates that the market is being supported by buyers. This structure shows that the short-term moving average is rising faster than the long-term average. This, in turn, suggests that the current uptrend is gaining strength, that buying pressure is increasing in the market, and more importantly, that market participants hold optimistic expectations for the future. Moreover, the upward movement of the MACD lines creates a positive psychological effect on the market, not just a technical one. Since many investors make decisions based on this indicator, a bullish MACD signal can trigger widespread buying behavior. This can lay the foundation for further price increases. Especially when these lines cross upwards from below the zero level, it indicates that a trend is just beginning and that significant potential is forming. The zero line is a critical reference point for the MACD. When the MACD line is below this level and begins to move upward, crossing the signal line, it is generally interpreted as a strong bullish signal. A positive crossover below the zero line is considered a serious buy signal with the potential to lift both momentum and price movements. Such situations are often seen as the preparation phase before a rally, where buyers entering the market take the first steps of a potential uptrend. Additionally, the distance between the MACD lines is also important. If the MACD line is moving further away from the signal line in an upward direction, this indicates increasing momentum. That is, the price movement is not just rising, but accelerating. These moments usually coincide with rapid price increases, rising volume, and growing market enthusiasm. This excitement boosts investor confidence and brings more energy into the market. Of course, as with any technical indicator, it is healthier to confirm MACD signals with other technical tools and price patterns when analyzing trend continuation or potential reversals. However, the mere upward movement of the MACD lines is already a clear indicator of a positive atmosphere. Therefore, the upward inclination of the lines should be considered a very positive development, both technically and psychologically for investors. Another major advantage of this indicator for investors is its effectiveness across different time frames. Whether you are a short-term scalper or a medium-term position trader, the upward movement of the MACD lines is always considered a positive sign. This demonstrates MACD's flexibility and versatility usage. Especially on 4-hour or daily charts, upward MACD structures often lay the groundwork for longer-term rallies. These timeframes are highly reliable and consistent in determining the general market direction. The upward inclination of the MACD lines signals not only a price increase, but also a shift in market structure. For investors, this means increased opportunities, higher volatility, and potentially greater returns. Because positively strengthening MACD lines are also followed by many algorithmic systems and automated trading mechanisms, they may coincide with points where institutional money and large buyers enter the market. This presents retail investors with the opportunity to enter major trends and maximize their potential gains. Furthermore, the MACD histogram provides valuable insights when evaluated alongside the lines. The MACD histogram graphically displays the difference between the two lines. If the histogram bars begin to grow upward, it indicates that momentum is increasing positively and the lines are rising while diverging from each other. This structure signals that prices may accelerate further to the upside. The growing histogram bars show that the market is being strongly driven by buyers. Considering all this, the upward movement of the MACD lines is a very positive signal in many aspects. It is a strong indicator that can technically lead to price increases and has a positive effect on investor psychology. In other words, the upward movement of the lines is not just a graphical event, but also a hopeful development for the market's future. This increases investors' motivation to hold positions longer and helps them develop strategies in line with the trend. In conclusion, the upward movement of the MACD lines is a strong technical argument that prices also tend to follow this movement. It suggests that upward movements in the market may gain strength and that investors, gaining confidence, may begin to make positive decisions. Especially when the MACD lines rise above the zero level, it indicates that the market has serious upside potential and that the necessary conditions for strong rallies in prices are forming. Therefore, closely monitoring the upward structure of the MACD lines can provide a significant advantage for investment decisions. MACD lines need to go upward.
Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.